Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Sunday, December 18th, 6:17 p.m. New York time. Day trading, options, SPX, 0 DTE. That's right. SPX is the stock symbol for the cash index of the S&P 500. Here's the symbol on the top left. If you want to trade a stock ETF, that would be SPY. And if you want to trade the futures for the S&P 500, that would be /ES. So we're discussing the cash index SPX. It trades Monday through Friday, 9:30 a.m. to 4 p.m. New York time. We're looking at the option chain, and this particular underlying stock index does have options that expire every trading day. Not all stocks have options that expire every trading day. Yeah, we're going to be focusing on the options that expire the same day and referred to as 0 DTE. So since today is Sunday, this won't be updated till tomorrow. So here, because today's the 18th, tomorrow, Monday, is the 19th. So in parentheses, where this says 0, sorry, it says 1 right now, it would say 0 tomorrow. Again, meaning 0 DT options expire that same day. And when you open up this contract, the 19th December contract, you have all these strikes. Got it? Again, these are option chain. This whole thing's an option chain. These are the contract. Contracts are these calendar days when they expire. Like if you get auto insurance, health insurance, life insurance, they have expiration periods. It might be 1 year, 1 month. And then when you open up the option chain contract, so now we got the contract open. Again, these are strikes. The left being calls, the right being puts. You have delta column. You have the bid and ask. And when you are selling, you're selling at the bid. When you're buying the ask. So if you're bullish, you're buying at the ask. And then when you want to close that position, you're buying it at the bid. Again, I'm showing you examples on the calls, just like the underlining. If you're bearish and you're selling a call option, well, you're selling it at the bid. And when you want to close that trade, you'll be buying back at the ask. Okay, let's go look at the charts now. SPX. It's already queued up here. I have 2 grids. On the left is the 15-minute chart, and the right is a 30-minute chart. And these are the lower time frames I'm showing you. Intraday. And we're going to zoom in because I'm going to show you the past 5 trading days. We'll identify several things on here. Zoom in. Zoom in. Right off the bat here on the left would have been the past Friday of prior week. The high of that trading day and the low of the trading day. I have these yellow horizontal lines. And then 9:30 a.m. when the market opens, first 15-minute candle. And this is the 30-minute candle. So we're going to zoom in a little bit more so you can see a little bit more content what I want to focus on. you'd be trading options that, again, expire the same day. So I like to look at a combination of these time frames, the 15-minute and the 30-minute, to help determine what kind of trade I'm going to place, bullish or bearish. But trading these options, money management, I'm not staying in this option trade all day long, even though they don't expire to the end of the day. Nope. Money management. I'm trying to get filled at a particular price, minimum, and I'm looking to close at a certain profit. So let me break this down. This is the SPX. It's not a single stock, it's an index. And this option strategy is using two contracts. You're buying one, selling the other, because this is a big financial instrument. That margin is $500. So for example, regardless of which one, if I was buying this one, 3,800, as well as selling the 3,805, that is $500 margin. So you need a minimum of $500 margin to do one contract, 5 points wide. Let me go next, explain this. When this underlining moves, see this right here, 38.52, when it goes to 38.53, 38.54, that fourth number to the right, just before the decimal, that's 1 point. That's $25 increments. So if you look at a single stock, a single stock that's moving from $10 to $11, that's 1 point, but that's $1. When it's moving from $15 to $16, that's 1 point, that's $1. Excuse me. This moves in 5 point increments. That 5 point increments is a value of, it moves in 1 point increments, but the value is $25. Or I say the price fluctuation is $25. Okay, I'll say that again. If you're buying a single stock, it moves from, say, $20, $21, that's $1.1. But this, when that 1 point moves, that fourth number from the left, 1, 2, 3, 4, fourth number from the left, that moves to 2 to 3, that's 1 point, but the value is $25. Okay, enough of that. Let's look here at the option chain. The option chain price fluctuation is when this moves 1 point, the underlying moves 1 point. The option fluctuation, that 1 point move is a $5 value. Yeah. So if you look here, these strikes, they're 5 point intervals, 37.70, 37.75, 37.80, 5 point intervals. But the value is a little bit different again. Understand that. When the underlining, SPX, the underlining here moves 1 point, this option chain, the price difference fluctuation is 5 points. And again, the underlining is 25 points. If you're trading these in the past, you should understand that. If you're looking to trade them, you should understand that. Paper trader first to understand that. Okay, let's go back to the chart. First 15-minute completes. I'll sit on my hands and wait and watch. Going into the second 15-minute candle. There it goes. It's complete, which would make the first 30-minute candle complete. Remember, the market, I said, is what? 9:30 a.m. to 4 p.m. So that first hour is not at 9, it's at 9:30. So 9:30 to 10, that's a half an hour. So the market is not a full even number of hours trading. Nope. That's why I'm showing you the 30 minutes as well as the 15 minutes. Well, from this point here is we see the first candle, 15-minute red, the second candle, green, and make higher highs and higher lows. But zoom out a little bit. We're still inside the range of the prior day. So that prior day high there, prior day low there. So far it's inside. That's suspicious. Because it's still stuck in the prior day. So when I'm seeing this action here, I'm trying to identify what to do here. Well, go back to the first two candles. First candle was squirrely. It was dodgy, small body, high till, low till. And this second candle, big solid body, small wick, bottom, small wick, top, but it made a higher high, higher low. Looking at the 30-minute candle, I see a big body, small wick on the top, long wick on the bottom, leading me to believe more bullish bias. Bullish bias. So right at that bat, I could be putting a trade on, a bullish trade on, and go into the option chain. Bullish trade on, I'll be doing a bull put spread. On this side, a bull put spread. I'd be looking for a strike. These strikes, I would want to have a strike below this, further away. And me doing this, I'm looking to collect at least targeting $1. $1. So that $1 might be nearest 11 delta. So again, the deltas here. And for example, let's just look at this. Bull put spread. You're selling bull put spread vertical. That's 2 strikes wide. So you'd be selling the 37.80, buying the 37.75. Again, that's 5 points wide. That's $500 margin. And again, when this moves each point, the underlining, again, here moves each point, then this option is changing in value, either positive or negative, depending if this is going up or going down. But this premium here is called a premium. That would be changing $5. Yeah, not $1, not 5.1, not 5.2, but $5 increments. Well, I would want the short strike here. I would want the underlining stay above it. And the faster this goes higher, this melts away because there's a credit. Yeah, but I would want to collect at least 100. Let's clear that out. And then I'm looking to target it to close it around 50. So that'd be 50%. Yeah, you got it. So let's go further now. Show you a few of these. Go in. Well, you can see it ran higher. So do that trade down there. It's going to be melting away and closing fast because it's trending directionally. Where if it was consolidation like this, it's taking longer for that price to melt away. You're still winning because it's above the short strike. But as it's going higher, that premium is melting away faster. Yeah, that's a good thing. That's a good thing. So let's zoom out a little bit. Zoom out a little bit here. Oops. There we go. So we just look at that first day here. Zoom out a little bit more. Go back here. Go back a little bit more. Yep, remember I mentioned that prior day. So before the market opens at 9:30, I like to label the high and low of the prior trading day. And then you see what happened here. We broke above that prior day and closed above it. So doing a bull put spread down here would have worked out successfully. If I stayed in the option till expiration, I would have kept the whole premium collected. Yeah, but that's not the money management I'm applying. Plus, I don't plan on staying in front of the screen all day long. And the risk is, the longer you're exposed to a position, the more likely something could go against you. And I'm looking to day trade it, not marry it all day long, but day trade it for typically one session. That'd be the morning session. Let's go on to the next trading day. Well, the next trading day here, we gapped up. And that's a gap up, meaning it's either gaps above or below the low of the prior day. Well, again, we closed here, this blue horizontal line here I have here. Zoom in some more. Because remember, I'll be labeling the high and low of the prior day. There we go. We gapped up there. First 15-minute gapped up. Big gap too. Let's go to the next 15-minute candle. Next 15-minute candle made a higher high, higher low. So I'm suspicious here. Huge gap, but the momentum's to the upside. Smaller candle, the second candle, smaller candle, more suspicious. Big wick on the top, smaller wick on the bottom. Yeah, I'm even more suspicious. Sitting on hands, not ready to take that trade yet. I like to see a retracement, midpoint of this candle. And the retrace the midpoint of this candle with a big tail on the bottom, when that retestament finishes, then I'll be considering bullish. But right now, I'm leaning more. Sitting on hands and waiting. Yep, look at that. Huge red candle made a lower high, lower low, closed red, big till. Okay. So right away there, you have a reversal. First 2 candles green, higher high, high low. Third candle, red, lower low, lower low. Lower high, low low. Bearish. I'll be looking to do a bear put spread up here. Sorry, bear call spread up here. Not necessarily believing this whole gap's going to get filled. But again, that momentum didn't continue reversal. Let's go in here to the, again, the first 30-minute candle. Look at that. Long body, but big tail on the top. Let's go okay. So Four 15-minute candles completed. That'd be two 30-minute candles. Let's go forward. There it is. Second 30-minute candle closed. Lower high, lower low. Big red. Yep, thank goodness. But you have a lot of people that might be trading. See this second 15-minute candle? Some people trade bullish as soon as you break the high of it. Well, again, that's one money management strategy. If they're wrong, what are they going to do? Stay in an ad? I'd again be conservative and sit on hands and wait till you have a confirmation like I just showed you. Let's go forward. More sell-off. Again, doing bull put spread up there. Sorry, bear call spread up there. And that's sell-off. Because it's trading momentum and a trend instead of consolidating, that premium collected up there, it's melting away faster. That's good. Get out of that trade faster for a gain. Going forward. Look at this. Rolling in. That amount of consolidation breakdown. Go forward here. Let's go forward some more. Look at that consolidation reversing. Go forward a little bit more. And bingo. It closed below the open. Let's go here a little bit forward, a little bit more. So obviously, again, if I stayed in that bear call spread, because the short strikes would be above, you would have made max profit. But that's a risk. Again, this trade here could have, from this consolidation, reversed, went the other direction. Yeah. Let's go on to the next. Go on to Wednesday. Look at that Wednesday. Again, there's a low, there's a high. We opened up inside that trading range. First 30-minute candle, all green. Two first 15-minute candles, green, higher high, higher low. So what I like about that is that second green candle, big body, small wick on the top, a little longer wick on the bottom, and first green candle, almost all solid body. I'm bullish bias on that. Again, look for that entry. We'll put spreads down here, lower strikes. So that lower strike with that lower delta, I'll be further away. I'm not going to be butt up against that. No, much further away. Let's go forward and see how things went. Look at that smackdown, way below. Let's go forward. Smackdown, look at that. So let's go forward here a little bit. Big reversal. Morning session up, even went higher. That was the high of the day. The afternoon, 145, and rollover went even lower. So again, another reason I like to be out of the trade before the next section, morning session, afternoon session, economic news released that day. And that economics news obviously had buyers bearish smackdown. So even though if I had a short strike here, short strike there, you know, saying my bull put spreads anywhere here, I would have been slaughtered because they tested it. Yeah, you would have been losing. So good money management. If I was there, hopefully it closed here. It probably did because you had the momentum to the upside melting away. Let's go on to the next one. So look at the next day. There's a low of that day. Oops. Gap down. Not a huge gap, but a gap down. Again, that was the low of the prior day. Gap down. Let's go forward here. Oops. First two 15-minute candles, red. Lower lows, lower highs. First 30-minute candle, red. Huge body. Leading bearish bias. Yep. So I'll be looking to my bear call spread up here. Somewhere one of these strikes further away. As soon as I get loaded up, receive my premium, place a working order close for 50%. Again, I might have to adjust that throughout the day or throughout the session if something may go against me. And you can look at here. Momentum, consolidation, little consolidation for a point a day, and then continue trending down. So again, when it's consolidation like this, the premium melts away slower. When it's trending like this down or trending in my direction, I needed to, the premium melts away faster. It'll continue going lower. And let's go forward here a little bit. A little bit more. Look at that reversing there. Let's go here. And end of the day. Let's go forward here. End of the day. So what happened here on that Thursday? We gap down, small gap, never filled the gap, continue going lower. Again, if I had stayed in that trade to the end of the day, sure. Bear call spread up here with a max profit. And we never had 100% retracement of this big candle. Nope. Let's go on to the next one. That Friday one. First two candles. First candle, red. Big solid body, but suspicious. Long tail on the bottom. Second one, inside candle, very suspicious. Yeah, but that inside candle is hollow, equivalent to a green. So again, I like to look at the 30-minute candle too. So I see this 30-minute candle. Red, long tail on the bottom. What kind of trade to take here? Very suspicious. Yep, let's go forward. So you can sit on hands. You don't have to take the trade right off the bat there. Nope. And see that inside candle? You could wait for a break of that, get more of a confirmation. So let's go to the next. Here we go. Broke below it. So as soon as it broke below that, one could have traded bear call spreads up here. Or if you were going to take that trade right away, well, then you would have already been in there. Let's go forward to the next one. That. Go forward. Continue going lower. And let's go forward on 30 minutes, see how it's looking. And finish here on 30 minutes. So what happened? If you took a bearish trade, as soon as it broke below here, that would have been, there you go. As soon as that broke, bear call spread, depending on what the delta you were using, it never, the high of this candle never got retested. But where this break was, let me remove this now. This break, it did get retested. So again, that's another reason I'm using delta that's further away from that up here. So these higher deltas I would have been using, smaller deltas, lower deltas, but further away here, never got tested. Yeah. And then you would hope as this moment went down, the trade would have been closed, because when it reversed, that's not the best thing in your favor. No. So again, do your due diligence of charting and understand how to read candles, as well understand the option chain risk. What that means is if you're using in par, some people use tight strikes right next to that. Yeah, that's a lot of risk. So you could still be wrong, meaning that this could go down, you could be bearish, and you can have a retracement. But because I'm further away, lower probability those strikes are going to be tested. So I can still win. First, if I did a strike at this level, retest it, risk being slaughtered. Many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.